Again, my name is Kim Getchell, and I'm a commercial loan officer here at Fame. And I've been with Fame for about 2.5 years. Prior to working at Fame, I worked at a lending institution here in Maine, where I was responsible for entering the Fame OLA applications. So hopefully my input on what I used to do will help you understand our Fame OLA application process. Accompanying me today, I do have Karen Kunesh and Michelle MacKenzie from Fame. They will help me answer questions and be inputting information into our chat for you as well. Before we get started and in depth into this training, I did want to go over some housekeeping details for today's webinar. We'll be mentioning a few resources throughout this webinar, which Karen will post links to in the chat window. So be on the lookout for those. When you have questions, please submit them using the Q&A window. You can open your Q&A window by clicking on the Q&A icon at the bottom of your Zoom window. Type your question there, and Michelle, Karen, and I will do our best to answer them all. Any questions we aren't able to answer during the webinar will be included and answered in the webinar Q&A transcript that will be sent out after the webinar concludes. To note, the transcript won't be available immediately. It will take us a few days to get it transcribed, and then we will be posting it on our website, and we'll email it out to all participants. Does anybody have any questions before we get started into this training? All right, we'll get started. Our primary focus of today's training will be Fame's secure web application for commercial loan insurance. The app is called Online Answer. However, I'm sure all of you often know it's referred to as OLA. The platform allows lenders to apply online for commercial loan insurance and receive an immediate decision once the application is submitted. So before we get started, I want to go over our agenda for today's training. So we're going to first discuss a brief overview of Fame's commercial loan insurance program. And then we're going to get into a step-by-step demo of an OLA application, and we'll provide helpful tips and answer any questions you have about the OLA application process. This application will demonstrate a loan using Fame's new higher loan insurance limit. We are also going to go over an OLA definitions and explanations page. This will give you some feedback or some insight on our processes on the back end. We are also going to, in your chat, you will notice we have downloaded a link for you to download that OLA definition and explanations page. So you might want to go ahead and download that now if you have the opportunity. Fame's commercial loan insurance insures a portion of loans made through participating financial institutions. Lenders can apply for commercial loan insurance in two ways. You can apply through our Online Answer OLA application process or the traditional application process. Lenders can choose from two types of insurance. Pro rata covers a percentage of lender's loss after default and liquidation up to 100%. I'd like to note the 100% coverage relates to loans made to veterans and must be submitted via the paper application process. If you're requesting 100% insurance to a veteran, a loan you're making to a veteran, this cannot go through OLA. Leverage covers 100% of the lender's loss up to 25% of the loan balance at the time of default. For a more in-depth look at pro rata versus leverage insurance, check out Roxanne Broughton's webinar recording, Leverage versus Pro Rata Insurance, What's the Best for Your Borrower? This can be found on our website. And if you want to run your own comparison scenarios, you can also download our Pro Rata versus Leverage comparison tool listed on the same page in the webinar resources. So any business located in the state of Maine is eligible except for the following: religious or fraternal organizations, gambling or adult entertainment facilities, residential housing, investment real estate, 50% or more non-owner occupied, and personal or family or household expenses. So we're going to go over our insurance limits. So pro rata term loans and lines of credits are eligible for 75% maximum insurance up to our new $1.5 million Fame exposure. 60% maximum insurance for startups, open less than 1 year, up to 1 million FAME exposure. Use of projections in cash flow limits availability to 1 million FAME exposure. Pro rata refinancing of lender debt, 40% insurance up to 1 million FAME exposure. And again, this is our new 1 million FAME exposure. Certain criteria does apply for leveraged insurance. It is not available. It's not available for refinancing existing debt. Leveraged term loans up to 25% insurance on up to 500,000 FAME exposure. And then you have leveraged lines of credit loans up to 20% insurance on up to $500,000 FAME exposure. FAME's aggregate exposure per borrower in OLA is 1.5 million. This can be a combination of pro rata and leveraged insurance with a $500,000 limit on leveraged insurance. And again, I want to note that as some of you may remember, FAME's previous exposure through OLA was 750,000 for pro rata insurance, and then on leveraged it was 250,000. So we have doubled those exposure limits. So based on the structure of your loan for OLA, the interest rate and term are decided by the lender. Security, all types of collateral is eligible except subject to review and acceptance by FAME. Insurance for term loans, you can have the insurance for 1 year, 3 years, or 5-year options. And then insurance for lines of credit, 1 and 3-year options. OLA fees, we're going to provide a link to our website so you can get more detailed information about the OLA fees. And then there's also a detailed fee chart there as well. Do we have any questions over the information we just went through before we dive into the application? If so, go ahead and ask them through the Q&A and we'll get them answered. All right, it doesn't look like we have any questions. Bear with me a second while I switch screens. So as everyone can see, this is our OLA portal where you would go ahead and log in. And once you log in, this will be the screen that you see. So I want to know over here on the left, so you'll see create new application and view existing applications. So when you're in this screen here, of course, if you want to create a new loan, you'd create new loan application. View existing applications will show you all applications that you have entered. The only person that's going to be able to see every application that has been entered for a lending institution will be the administrator of your OLA program. So for this training, we went ahead and I entered an application so that for time purposes, we'll be able to go through everything. So I'm going to do view existing applications. And then I'm picking my borrower here. If you ain't first, your last LLC, and we'll do edit. And it will load our application. So on the first screen, when you get in, and you're going to see this loan officer tab. So here you can use the drop-down menu and use existing loan officers, or you're able to enter a new loan officer here as well. So I want to note that through this application, as we go through different sections, we are going to stop at the end and then we'll go ahead and answer any questions that come through because we'd like to try to answer as many of those questions live as possible. So after each section, I will pause and see if there's any questions. So do we have any questions over this loan officer tab or screen at the moment? All right, so we'll move on. So you have a couple options. You can pick loan officer, just hit these tabs to move to the next process, or you just do next tab. So the next tab is going to bring up your profiles, which are your borrowers, your co-borrowers, etc. So this part is pretty self-explanatory. So you do your drop-down box, which have your borrower, co-borrower, corporate guarantor, whomever it is. So for this, we're doing borrower. It is a business. Type of business, again, the drop-down box gives you many different options. You can pick which one you want. And then the next part, you're going to enter your business name information. So I want to note here, as we're talking about business name, tax ID, etc., if your business entity hasn't been formed, and if they haven't established a TIN, you can still submit the application for an approval through OLA. You would enter the borrower entity as to be determined, and the TIN number can be random numbers. So you do have that option. You don't have to wait until it's the company is fully set up if it's a new entity, and you can test it ahead of time to get that approval if you want. Once the application, so if you submit it as to be determined, once the application is approved, the application will be moved to a pending status until the name and TIN number have been established. Once this happens, you will need to go back into the application and edit these areas, and then resubmit the application. Then at that time, we will issue the fee invoice for this loan. So after you've put in the business information, you move over to your financial section here. And so I'm clicking in this most recent year ending for your financials. So if you notice, the drop-down box comes down with a calendar. I highly suggest that you use this drop-down box and select the year date of whatever financials that you're using. Sometimes if you type into this box, if you type 12/31/20, it's not going to correctly input the information, and it may come back and show that your year that you're using for your financials is incorrect. So just a note on that. Just again, drop down here, pick the month, the year, and the date. Financial quality, again, there's many different options: audited, reviewed, compiled, tax return, management prepared, and projections. For this, we're using tax returns. You'll enter the information from the tax return that you have or your analysis as it comes down through. And so I'm going to highlight here in this section, we want to talk about the business debt service. So the business debt service is annual, and it should include all debt of this borrower. So make sure you're putting in the annual debt service for this borrower. And as you can see, it calculates the debt service coverage ratio for you automatically. So after this, we're going to move to another section. But before we do that, is there any questions on this section that we just talked about? And again, you can ask those questions through the Q&A. We'll move on to the next section. And feel free to ask questions anytime. Don't have to wait till we get to the end of a section either. So we're going to, as you can see here, we have delete this profile, add an additional profile. So if you wanted to add another borrower, guarantor, et cetera, you do add additional profile, and it populates the same information that was above. So for us, we are going to have a co-borrower here. And I want to note, if you have two borrowers on your loan, that in the OLA application process, that second borrower does need to be listed as a co-borrower. You cannot have two borrowers through this process. Again, business, type of business, we're doing an S Corp. So for this business, we have Shake and Bake Inc. Again, you enter all the information, go to financials, and again, enter as you go through. So here, I want to hit on adjustments. So adjustments can be entered, excuse me, can be entered here. These can be negative adjustments, positive adjustments, add backs, different things that you're doing that you put through your analysis. When you do enter an adjustment here, you do want to make sure that you give us a detailed information of what that adjustment was for. So for this, we're doing storage and rental fee add back, and you'll put that here. And once again, it calculates through this process here. And here's your debt service coverage. Do we have any questions over this section? And yes, they're pretty similar. I do understand that. So we're just trying to hit a little bit in each section too. So we'll move to the next one. So for us, we added another additional profile, and now we have our guarantor. So for guarantor, personal guarantor, it's an individual. Business type, you would select none on this. So now we have Mr. Ricky Bobby as a guarantor, and we've added his social security number, all his additional information. Again, tax year, credit score, we've put all that in. So here I want to hit on exemptions. FAME calculates exemptions and always includes, so you always want to include a number of exemptions in this section and in this area. And then as you notice, I'm going to change this to 3, and it calculates a different estimated living expense here. If I bring this back to 4, watch this number here, it changes. So it does adjust it. So you want to make sure you're putting your exemptions here. So when we come down to here, I'm going to talk about personal debt service. And I want to talk about this because oftentimes lending institutions will have your internal analysis may already have a debt service calculation included that includes a living expense amount. So if that's the case, you'll want to make sure you back that living expense amount out of your personal debt service because FAME has already taken that into consideration through the number of exemptions here. So for instance, if your personal debt service is $30,000 for the year and $15,000 of that is your standard living expense calculation, then you will want to back that out and only enter $15,000 here. So you don't want to hit your borrower twice for a living expense is the main thing about this. And so again, calculate your debt service coverage ratio here. So to note, you may notice that the debt service coverage ratio may differ in FAME's OLA application process to your analysis. And again, that can be considered part of this number of exemptions and your debt service for personal. So you just want to make sure that it may not match exactly. So don't be worried if it doesn't match exactly. And is there any questions over what we just discussed here? So again, we added an additional profile, and now we have Mr. Cal Naughton as our next guarantor, individual, again, business type none. You will enter all their information again, most recent tax year, credit score, etc. So here I want to note, if your second guarantor is the spouse of the first guarantor and they file a joint tax return together, and if your analysis doesn't separate their income, you can include all their income and expenses and tax information under your first guarantor. So for instance, you'll still need to enter their name, social security number, tax year, tax return, and the credit score here. What'll happen is through this, you will enter wages at 0. All the other boxes will come through as 0, all the way down to the end. Because the system understands and knows that that information was included in your first guarantor. Do we have questions over what we have just covered in this section?
I do have one question, Kim. The question is, do we add in distributions from business to guarantor cash flow missed if the business cash flow is pre or post distributions? I'm going to let you answer that one.
I'm going to read that question one more time just to make sure I understand it, and then I will get the answer.
Okay.
For this question, I'm going to state that you're going to follow how you enter into OLA is how your analysis is written. So in your cash flow, if you've taken distributions from the business and they'll show up on your borrower's tax, your guarantor's tax returns, you will want to enter them in under the guarantor section as it comes through as income. If I haven't answered that question correctly, Teresa, please let's get together and we'll talk about it outside of that, because I want to make sure I'm understanding exactly how you're inputting this. But you want to, again, follow your analysis as how you've entered through your cash flow.
Okay, I do have one other question. The question is that she thought we have to enter at least $1 for income and $1 for debt service on the second individual guarantor. I didn't think it accepts zeros, or did that change? I believe I can answer that. The second guarantor, you would put in the credit score. You don't need to put any income. You, on the personal debt service, you can put $1, or I believe it does accept a 0 there. That's the only financial information you would have to add on that second guarantor. if they're filing a joint return.
All right, it doesn't look like we have any other questions on that section. So we'll move on to our next section. So from here, I'm selecting next. Before I select next tab, I do want to mention that the OLA application does calculate a global debt service once everything's in there, and that will be down here. And again, remember, this may differ from what your analysis or your underwriting states, again, because of the exemption calculations. If you needed to add another profile, another guarantor, things like that, you would do additional profile and it will load all the financial information requested. So we're doing next tab. So on the next tab, we come to industry information. So on here, there's an option to enter the NICS code or the 6 code. You do not have to enter both codes, but you do need to enter at least one code. You'll fill out the industry description, what industry this is, labor market, you'll select the town. And once you do that, the labor market area automatically populates. So I do want to note here, you will need to enter the NICS code or the 6 code for your for the operating company. So for instance, if we formed a real estate holding company, but my racetrack and my race cars are going to be there, that's the operating company. So I've put this down as racetrack. Do we have any questions over the industry information tab? All right, so we'll move on to the next tab here. So on this tab, this is our job tab. The highlight of this I want to know is this business and associated jobs are primarily located in Maine, yes or no? It's important that you enter this information as accurately as possible. You can have locations, parts of your business located outside of the state of Maine. However, the primary location needs to be in Maine. If you select no here, the application will give you a warning signal that once you submit the application, it's possible it will pend. So you want to make sure you understand that you need to select one of these. It is important, so we selected yes because our business is in Maine. It is important to get this information, salaries less than 25,000 to salaries in this range and in this range here, correct or as accurately as possible. And I say this because OLA will calculate points for the jobs created and the jobs retained, since job creation and retention is part of FAME's mission. So try to get this as accurate as possible. You can talk to your borrower ahead of time if you're questioning it, and then you'll enter all this information here. To note, if your applicant does have more than 10 employees, you will be required to fill out, it's going to auto-generate an employee plan form that you will fill out. Once this is submitted, it does complete and send to you. Do we have any questions over this tab?
I do have a question, but it is relating to some of the financial information. So for individual guarantors, the cash flow section starts with wages and adds relevant other income, interest and business, etc. The adjustments require that unemployment be entered as a negative adjustment, but is not already included in the income above. Can you explain the unemployment adjustment? I defer that to you, Kim.
Okay. Well, I'm going to jump back to the profile screen. So if you're making this adjustment here, is where I'm assuming you're making your unemployment adjustment. So you put it in as a negative because you've taken it out, and you're going to enter what that was for here and why. So I think the big thing that you need to remember, we are not structuring your loan for you, and we are not making this OLA application will follow pretty closely, pretty much everything except the exemptions to what your analysis says. So if you entered it in your underwriting, then you'll want to enter it here to make sure this matches as closely as possible. So you'd put that adjustment here and then the reasoning here. And Vicky, if that doesn't really kind of get you the answer that you need, definitely we can talk about it offline so I can understand if it's something in your analysis that you're looking at doing or if it's something you're seeing on the tax return. So we'll go back to our job. We have no questions over the jobs tab. We're going to move to our next tab, which is the loan tab. So again, to note, this loan is demonstrating Fame's new exposure limit, which is the $1.5 million exposure limit that's able to be run through OLA. So here we have we're demonstrating a 75% insurance request. So here we have our $2 million loan. The type of loan is going to be many options that you can pick from. For us, this is a term real estate. Your initial insurance term. So again, you can pick 1 year, 3 year, or 5 years. To note, if you select a 3-year term or a 5-year term, and in year 2, you decide to cancel the insurance, that fee is not refundable. So just make sure you look at that. Related profile. So here's, you're going to select, again, you can see it's our borrowers, and then our co-borrower, and then our guarantors. So then you will select each of them to add to the loan. Business age, again, drop-down box that you can select. We have an existing business over 5 years. So refinancing existing debt tab. So I want to talk about this briefly. You do have the ability to ask for insurance if you're refinancing existing debt that your institution currently holds. Once you if you say, yes, I'm going to refinance existing debt, it's going to bring up this pop-up window. What I suggest is if you are looking at refinancing existing debt into another loan or giving somebody more money, you contact a Fame loan officer prior to submitting so that they can discuss this with you to make sure you're covering all the aspects that's required for refinancing of existing debt. So again, as you'll see here, it lists out what's required for this. You'll answer these fielded questions here. And then at the end, you select that you agree, and then you'll hit OK. To note, refinancing your existing lender debt does limit the Fame exposure amount. So that's why we do suggest you talk to a Fame loan officer prior to submitting anything through OLA that's refinancing existing debt, so we can make sure we're getting exactly what you need. So for this transaction, we are not refinancing existing debt. We're looking at pro rata insurance, our 75% request. So as you know, on the 75% request, it auto-populates the insurance amount that's requested. So once you put in your percentage, it'll populate here. So this blended rate detail tab here. If you select, say for instance, you wanted to refinance existing debt, and you wanted to give the customer new money, you would select, you have the option to have blended rate insurance. The blended rate insurance, I'm going to do a small example. So if you have a $100,000 line of credit currently, it's not currently insured, and your borrower would like to have $200,000 extra. So you'll have a total $300,000 line of credit. And you want to do that for your borrower, but you want to have some insurance on it. You can request to have up to 40% pro rata insurance on your existing $100,000 loan that's not insured. And then you can request up to 75% pro rata on the new $200,000. So on your $300,000 line of credit, you would have 64% blended rate insurance. So it insures both portions. So you do have that option to do that. And what you would do, if that's what you're going to do, is you would enter that information, detailed information here. So you would say 100,000 at 40%, 200,000 at 75% in this blended rate details tab. Also to note, if you'll notice, we have these little icons here. If you hover over them, it pops up a box and it will tell you, give you a definition of what each of these things mean. So once you're doing this, is this business a natural resource? It'll explain to you what we consider a natural resource. Is it not for profit? If this is a construction loan, you would select this. So as we're talking about this, construction loans, if you select that this loan is a construction loan, the insurance isn't in place until construction is complete. We are not going to insure your loan while it's being constructed. So what'll happen if you select construction loan, once this is approved, your construction loan receives a 6-month authorization compared to the usual 30-day authorization. So just to note on that, to make sure you understand that construction loans are not insured at the start, and you do have 6 months authorization period on that for the construction to be completed. Then we go down and you have interest rate. You can select fixed or variable, payment type, principal, interest, etc. Then you'll type in your terms and months, your amortization, and then you're going to want to give us the information of what this loan is for. So this loan, we're purchasing the warehouse that will be used for storage of cars and racing equipment. Do we have any questions over this loan section?
Okay, I do have a couple questions, Kim. First one I received was in the chat. How many extensions are allowed on construction after the initial 6 months? I guess at that point, we would contact the loan officer to determine where we are. And we would kind of work with you on that. If you need another 3 months, and if you need another 3 months after that, we would have that conversation and then we can approve extending. In circumstances right now, a lot of construction is taking much longer. So we certainly can work with you on that. The other question, how do you indicate skip pays? So I assume that is on your, when you're entering your term and amortization, if you're giving them like 3 months of skip pays for months that they're not working. Is there a place, Kim, where we can put notes? I thought there was.
Usually we've seen it come through in the blended rate. People will put notes, but that doesn't usually open up to allow that. You could probably put it in the purpose if you needed to explain that. Yeah, because the blended rate detail tab will open up when you select that. I would suggest if you're going to do a skip pay, when you do the purpose of the loan, you could put it here. Because what will happen is when this application is submitted, the loan officer gets it to review it. So if you put a note here that you're skipping payments, we will contact you to verify the information. All right, it doesn't appear we have any other questions on this. So we'll move to our next tab. So the next tab brings you to the collateral section. So I do want to note before we go over everything here, for the new higher FAME loan exposure limit, I want to make note that any loan over 1 million of FAME exposure, the loan will need to be secured by a first or a shared first lien position on all material collateral. This is part of FAME's credit policy. So just remember, the new higher loan limit is going to require a first or a shared first lien position on material collateral. So for our first piece of collateral, we have, you drop down this box, you have many options that you can choose from. So for us, it's going to be an industrial warehouse. We are first lien position and our gross value is here. So to note, you want to make sure the value that you're entering here is the gross value of the collateral, not the discounted value, because we are doing our own discount on that value. So make sure we're not double hitting your borrower and make sure this is the gross value that's entered here. So value type, what type of value is it? Your source, again, many options here. So we got an appraisal. There's no priority liens on this property. And what's the description of the collateral? And then where is it located? So on this, I want to note that this loan, since it is over $1 million of FAME exposure, and we're using this industrial warehouse, you will need to complete the DEP environmental assessment form. We are working on having that environmental assessment form automatically sent to you once the loan has been approved. So it's going to be similar to the employment plan form. If you have over 10 employees, once the loan is approved, it automatically sends the form with your authorization. So we are working on having that done for this DEP form. So we don't want you to have to go anywhere to download forms. Since this new exposure is new, we are working out all of these things as we get into different loans. So we're adding, we'll move on, and we have our next piece of collateral. We're doing machinery and equipment. Here we're having a second lien position. Again, the gross value has been entered. We're using the purchase price value, and then we're entering amount of priority liens here. What exactly is it? And then where is it located? We'll move on to our next piece. So for this loan, we wanted to take the guarantors home as an abundance of caution. So here we've entered the primary residence, what the lien position is, what the gross value is again, the amount of priority liens, and again, what the description is, and where is it located. And again, if you wanted to add more collateral, you would just hit this add collateral to loans tab. Do we have any questions on this collateral section?
I do have one question. The question is, are appraisals required for specific levels of insurance? And I'll defer that to you, Kim.
On appraisals, you're going to want to follow your lending policy for your institution. My assumption is that you have a limit for your institution that will allow you to do a broker's opinion of value. And then there is going to be a policy where you have to have an appraisal depending on the size of your loan. So you want to follow your lending institution's policy on that, right? And if we don't have any other questions here, we'll move to our next tab. So on the next tab, we get questions on this uninsured debt screen. So uninsured debt is going to be any debt associated with this transaction that you are not requesting FAME to secure. So again, if you highlight over here, it'll say other loans for this project without FAME insurance. Non-lender debt, is there seller financing or anything like that in here? And then equity related to loan one, you can enter equity in here if the person's putting money into it and there's equity in the transaction. Do not be worried if you don't have anything to enter here. It can be zero. There's nothing that states that you have to have information in here. So we often get questions like, oh, I just have zero. Is that going to be a problem? No, that is not a problem. Do we have any questions on the uninsured debt portion? Okay. So from here, a couple things to note. As you notice, I didn't have to save the application through this process. Every time you went to a next tab, it saved the application for you. If anyone previously used FAME's OLA application, there was often times where you had to save the application. Our new setup does not make you do that. So that's a nice thing. It looks like we have a question.
We do have a question. Can you discuss the 110% loan to value threshold? Is that a hard limit? Relatedly, the 120% limit for refinance. And I'll give that one to you, Kim.
The 110% LTV threshold is not a full hard limit because we do have the option to look at things and override them. Once you get to a certain threshold limit, your scoring does go down. We do give you less points for higher LTV positions. On the refinance, again, I want to say we'll review it under certain circumstances. So again, reach out to us prior to doing that so we can run calculations with you and make sure it's going to fit correctly. I think the nice thing to mention about FAME, we're here locally so we can work with you. We're happy to get on phone calls with you, meetings with you. to walk through any of these deals that you have. So if there are questions, we always try to get that yes answer for you. So we'll look at it constructively as much as possible. And just remember, we do have our paper application process. So if something can't go through OLA, we do have that paper application process that gives us some more room to work with different things and structure it so we can still get you to that yes as much as possible. So if we have no other questions on this uninsured debt tab, I'm going to talk about submitting your application. So you have two options here. You can test submission it, which basically, if you want to see, hey, how's it going to score? Is it possible to be approved before you discuss it with your borrower or before you send your request to approval? You can do a test submission. So on this, I'm going to show you what that'll look like. So if we do a test submission, it's going to save it, and it will give you this information that based on what we entered, our online application for Fame and Loan Shorts is likely to be approved. So you have a couple options. So if you're like, great, I want to move forward, I want to get the full approval, you can then submit for approval, or you can leave it and just let it sit, because it will always still show in your applications, even though it hasn't been submitted, it'll be there. So if you wanted to submit it at a later time, as you get closer to closing, etc., you have the option to just log back in, edit the application, and hit submit for approval. So on this one, I think let's send it for approval and see what happens. We're going to do submit for approval. And as you notice, it's saving. And so here it tells me that it's been approved, and it gives me the option to print documents. It tells me what my Fame loan number is. And then it tells me that the details of our loan insurance approval has been sent to the Fame business inbox, and everything will come through there. Do we have any questions over submitting as test or submitting for approval? It doesn't look like we do. And if you do have any questions over this OLA application process, feel free to enter them in there as we move forward too, because we'll definitely stop at the end of everything and go over questions again. Okay, bear with me a second while I switch screens again. So on this slide, we're going to go over our document that contains the definitions and explanations for OLA. So if you haven't downloaded the definitions and explanations document, you now have another opportunity to do that. So I'll give you a minute or so to do that if you want to. I should note that that link is sent through our chat if you haven't seen it. So this document contains a lot of useful information, and we'll cover a few of the items that we get the most questions about. And we'll also cover some processes that we also get questions about as well. So hopefully that will give you some understanding of our process on the back end. So the first thing we want to talk about is what is an OLA administrator, liaison, bank contact, relationship manager, and OLA user? What do these terms mean? So if we say them to you, you have a better idea. So your OLA administrator is the person who approves all new users in the OLA portal, for the OLA portal user, and notifies Fame of any changes. So if you have a lender that leaves, or you want to take somebody out of OLA who inputs applications and you want to add somebody, that's the person. So it's an OLA administrator. The OLA administrator can also access all loans, no matter who originally input the loan. So they will see everything for the lending institution that has been input into the Fame OLA portal. You can have a maximum of 2 administrators per lending institution. We often see that one person is the person who approves OLA users, and then there's a general overseer of the program. And the second person could be the bank contact or with administrative permissions. So when we move to bank contact, and so I'll use some of these terms and when we explain what each person means, so you'll have some idea of what we're talking about here. The bank contact is the person named on all OLA loans along with the relationship manager of the account. So the relationship manager is the lender on the account. The bank contact receives all automatic notifications of upcoming expirations and maturity dates. So we send out notifications when expirations are coming due, they come out 30 days, 14 days, and then a day ahead of time. So you'll get those notifications. An additional contact when the relationship manager is unavailable or not responding. And there is one bank contact per lender. So the relationship manager is our next person. They're, again, the lender loan officer for the given account, and they receive all automatic notifications of upcoming expirations and maturity dates for those loans. They are ultimately the person responsible for any questions regarding the loan. So if we have questions on the loan, we'll reach out to that person directly. And we want to note that FAME cannot copy a lending institution, a lending assistant, sorry about that, or portfolio manager, anything like that on the email correspondence. So they will go to the lender direct. The user, we have the OLA user. They access the portal to input new loans and renew loans they originally submitted. So we have questions sometimes come up. Someone's left the bank, someone's on vacation, and you need to access an application that this person entered, but they're not there. So in certain circumstances, we can provide temporary administrative permission if the user needs to renew a loan originally entered by someone else. So you do have that option to get that. Your admin person would just have to let us know. So that's kind of a little brief overview of terms of when we talk to you and we say your OLA admin or your user, what they would need to, who that is. Our next thing that we wanted to go over is construction loan protocol. And as you know, I mentioned a few things in the OLA training, but we did want to go over a couple things just to kind of know how the process works on the back end. So when a construction loan is submitted and approved, again, FAME provides a 6-month authorization. The expiration date, a 6-month authorization expiration date with the expectation that the construction will be complete and the loan will be closed. The authorization can be, again, extensions can be granted. You'll just let your loan officer know on that part of it. FAME does not insure loans during the construction phase, which again, I mentioned before. There are special conditions where that must be met if you require loan insurance during the construction phase. So there is a possibility, but special conditions have to be met. And again, you're going to want to talk to a loan officer prior to submitting any application that needs insurance during a construction phase. Per FAME loan documents, the signed authorization and commitment fee are to be returned to FAME within 30 days. This provides assurance of the loan closing and pays for any due diligence by FAME. So as you know, when a loan is approved, you usually receive the authorization, and then you receive the fee invoice. And the fee invoice will have your annual insurance fee if that's what you've picked, and then your commitment fee. On construction loans, we require the commitment fee and the authorization come back prior to the full loan going into full repayment. And again, if on this document, you'll see that we've noted the annual fee is to be paid when the loan goes into repayment. And that's when the loan insurance becomes effective. This construction protocol applies to all OLA loans and to any traditional paper application. Looks like we have a question.
We do have a question. Can you run through the fee calculation for a $900,000 loan with a leverage guarantee through OLA? So 900,000 at 25% because it's leveraged would be 225,000 of FAME exposure. And that is going to be a 2% annual fee of $4,500 and a 0.5% commitment fee, which would be at $1,125. Beth, if you have any other questions on that, certainly reach out to me or one of the loan officers and we can help you with that.
Thanks for having the calculator available. All right, so we'll move on to our next topic, activating loan insurance. So loan insurance is activated in our system when we receive all payments due and the signed loan insurance authorization. So Fame loans closed maturity date will likely not be the same as your lenders. And again, that's based on when your loan closes and when we receive the fees. Loan insurance coverage is spread per month, the first to the last day. However, maturity dates can be any day of the month. So in this document, this example document that we have, if you notice, if you're able to download it, we do give you an example. So the date your loan closed, what the maturity date would be, when the insurance would start, and when the insurance expires. So just so you know that this document will live on our website as well. So if you didn't get a chance to download the document, or if you're calling into this training, you'll be able to go to our website and get this too. As soon as we set up the transcript for the webinar, they'll be there. So we wanted to go over annual financial requirements and when FAME needs financials. So annual financial requirements, FAME does require that we receive annual financials if the FAME exposure is $500,001 or greater. So with that, part of the financials that we need to receive will include the lender's annual review, copies of recent tax returns and business financials, copies of recent personal tax returns and personal financial statements for all guarantors, copies of recent tax returns and financial reports for all corporate guarantors. We send a letter for this, so you'll be notified that these are the things that we are requesting. If the FAME exposure is less than $500,000, no annual financials or lender reviews are required. However, FAME reserves the right to request these at any time. So just to make note of that. Modifications, consents, and collateral leases, and when to contact FAME. So as you know, part of like what we tell everyone is that you can modify, change collateral, do different things on your loan. However, you need to contact FAME prior to doing that. So any changes to existing insured loans must be approved by the FAME loan officer on the account. So what we suggest that you do, if you have a change that you want to make, is send an email to your loan officer and to the business@famemaine.com email address with the details of your request. If you have prepared a memo or you have other documents with specific information about the change that you're requesting, please include those in your email as well. Once that has been reviewed and approved by your loan officer, we do issue a consent letter or an authorization amendment that will be sent to you that details the nature of the change. I would like to note that all modification requests are charged a $100 fee. It's significant work and underwriting is required. This fee may be higher. And we usually try to remind you when you email your loan officer that there is a fee associated with this so that you can know that it's coming when you receive your authorization. To note, we do suggest that you send an email or copy your loan officer to an email that you send to business@famemaine.com, because this is the general business inbox for FAME. So if your loan officer is out of the office, then somebody is aware of the request that you're making and can notate that and then make sure your loan officer gets that request when they're back in the office. So again, you can send everything to the business inbox and copy your loan officer to it, or vice versa, however you want to do it. But it's always a good thing to try to make sure you send any request to the business inbox as well. Do we have any questions over what we've talked about here for our explanations? And again, this document will live on our website. Okay. So before we go into taking any additional questions, I do just want to let everybody know all the COVID loans that FAME had available have now sunsetted, so they are no longer available. Just kind of a reminder to people, we did have some, but now they are no longer available. Do we have any additional questions that we'd like to talk about over any of the training or any of the FAME programs?
Okay, I do have a question. There's Jen mentioned to go over how to get a contract for an institution that does not have a contract with us yet. And right after that, we actually got a question from one of our attendees that if we're not currently set up, oh, how do we get set up? Okay. They are two different questions. If it's a new institution, we do need a contract signed by you, which you would authorize your OLA users. You would contact Jen Cummings and she can work with you to get what we need to you. You also would need to provide us with your credit policy and financial information for review before we authorize the lender as one of our partners for loan insurance. And setting up for OLA, we just need a request from the administrator at your lending institution to provide the contact information for your new user. And I usually set those up so those can come either to me or to the business inbox, and we will get that taken care of. And the next one, how long does that process typically take, getting a new lender set up in OLA? Oh, depending on my day, it can go a day or maybe 2 or 3. It kind of depends, but it really doesn't take that long as I have the time to do it. Karen just added a comment to contact Jen if you want to get set up for loan insurance with us. And I have another one in the Q&A. Could you speak to renewing insured lines of credit process? Oh, Kim, you want to do that?
Sure. So a couple things. If your line of credit that you're wanting to renew is through OLA, as you'll know, you'll get notification that it's coming up for renewal. So in that process, you'll go back into your application screen. So in OLA, moving forward here. When you're in OLA, you will look at your existing applications, and that lender, that borrower will show up in your existing applications. You will do edit, update the financial information, and then you resubmit it through OLA, and then it will be approved.
Okay. One little correction there. When it's renewal and it shows in your loan list, you'll click renew, and that will bring you your borrower information. All the demographics will be populated. You'll just need to include the updated financial information, and then you can submit. Edit is if you've already made some changes and you've saved it and you need to go back to it, then you can click edit, finish the input, and then submit.
Thanks for the correction, Michelle. It's been a while since I've done a renewal, like 2.5 years.
Mm-hmm.
And do we have any other questions? And again, feel free to enter questions at any time. The transcript of this training and all the questions that were asked will be available. And again, we'll let everybody know when that happens. So as you can see on the screen I've brought up now, this is our contact information for us here at Fame. So Roxanne's information is here, mine, Matt's, Karen's as well, and Jen's as well. Our website on here, and to note, we are getting a new website, which will hopefully be launched by the end of the year. So that'll have a lot of good information and some new updates as well for everyone.
Okay, I do have one more question, Kim. So if a bank is doing a drawdown line for leasehold improvements or equipment, when would the insurance be in effect? Day one or once it's fully drawn down and converts to P&I? So for this, what we normally would see is, say, a term of 72 months, but an amortization of 60 months. So that kind of gives us the impression that for 12, you've got a 12-month drawdown period, which that is fine. So insurance would be effective on that day. But when you do your monthly balance updates, we do keep the full amount of the loan. So if you've put in a loan for 200,000, but you've only dispersed, say, 50,000, we're going to keep it at that 200,000 until you've reached that maximum. And then it'll start going down once you start repayment. I hope that answers your question. If not, certainly give us a call. One other question. Could you discuss what's required when you're increasing or decreasing a loan amount for a renewal? You would need to submit a new OLA application. OLA does not allow you to change the loan amount of an existing loan. That's probably something that you might want to contact the loan officer beforehand, so we can kind of explain to you how that works. We can credit some unused fees if you have to replace something halfway through the year. But we can certainly do that for you, and a conversation is probably a good thing to have.
Do we have any other questions before we sign off? Doesn't appear. I want to note that if you're a user, if you're an OLA user, and if you're ever in an application and you have any questions, or you want someone to sit with you and walk through the application as you enter the application, feel free to reach out to me. I'm happy, to come visit you in person if you'd like, or get on a call with you as you walk through it. Willing to do that for anyone who has questions. Even if you're experienced in doing it and you have questions, please reach out to me while you're entering the application. I'm happy to sit through it with you and go over everything with you, discuss it ahead of time, talk about it after. That's not an issue at all. And if we have no other questions, we'll go ahead and sign off for the day. Again, I do appreciate everyone getting on this training with us and this webinar with us. And feel free to reach out to any of us here at FAME. And again, check out our new website that should be coming up within the next couple of weeks. Maybe I'm pushing that a little bit. By the end of the year, at least, we should have a new website. So thanks again, everyone, for joining us today. We appreciate it. Everyone be well.